Hey everybody, Jeff Yastine here. I'm glad to be back with you again. By all means, keep subscribing to my YouTube channel. Follow me on Twitter and on Facebook. So I wanted to talk to you about a stock that I actually gave you about a week ago as a sort of inauguration or post-inauguration play, but I've actually been following since early November. And the thing I'm wondering now is this stock the next GameStop? Now, if you've been following the news lately, you're probably seeing the headlines like this one about GameStop, a sort of down and out retailer that a lot of short sellers had been piling into, not just recently, but really for years, because it's just one of those stocks that I always thought had value there. I never recommended it, but I always thought there was a lot more value there than short sellers were giving it credit for. And for a variety of factors now, basically a lot of people have piled into those shares, a lot of longs, and they have forced this massive short squeeze amongst all these short sellers who basically had to bail out of the stock as the price went higher and higher. So circling back to the stock I told you about a week ago, and it's this stock right here. This is the video where I talked about it. Inauguration catalyst sends this health insurance stock higher. And the stock that I was mentioning at the time is this one. And so here is a look at that stock, EHealth, symbol EHTH. And as you can see, really since the 19th, it has suddenly started to wake up. I actually recommended it here in early November at the time of the election. And I recommended it simply because I thought that at the time, the shares would do well both under a Biden administration and really under a Trump administration, if that had been the way the election had gone, simply because eHealth operates a profitable software platform that allows insurance companies to come onto the platform and sell policies of various kinds. And it's a highly profitable business model and has been so for a while. So as you can see, since the election, the stock basically went sideways, and then suddenly, basically on the day before the inauguration, the stock woke up and started moving. And that's the reason why I recommended it at the time. But here's the thing that's interesting, and the reason why I say, could this be the next GameStop? Last year, a famous and well-respected short-selling research firm called Muddy Waters, run by a well-respected researcher named Carson Block, had recommended shorting shares of eHealth. And it pushed the shares down quite a bit. And ultimately, from that report down to the bottom in mid-September or early September, the shares dropped 45% before recovering to the present price level. So bringing us back to the current time, eHealth remains a heavily shorted stock as a result of that Muddy Waters research report. The company still has strong earnings to report as well, and you can see that if we punch up the estimates here. And here it is, right here. For 2020, the company, as it concludes and reports its final numbers, should report earnings of around $4.21 a share for the year. And for 2021, it should report, again, a nice gain of $5.49 a share for this year, rising to $7.66 a share for next year. So if you were interested in looking at eHealth as a stock for consideration, I would say look at it, because I think there's a lot of value there. I mean, basically, if you do the price earnings ratios on a stock like this, trading for around $92 a share as I tape this video, versus what it's expected to earn this year and then grow to for next year's earnings for 2022, to me, the stock looks undervalued. But on top of that, we do have this situation where if there are lots of short sellers still camping out in a stock like this, and as we saw with GameStop, that does happen from time to time, it wouldn't take much for a stock like this to suddenly start popping higher as well. And so there's one more reason why I think EHealth as a stock and as a company ought to be given more credit for its fundamentals and its overall, the strength of its business model. And one reason that I find impressive is on this page right here. And this is a list of the insider purchases and sales of EHealth stock over the past year and a half or so. And what I find impressive, you can see right here where 3 of the senior people within EHealth stepped in and bought the stock. You can see here one of the directors on the board bought $142,000 worth of stock. The CEO, Scott Flanders, bought $3.5 million worth of stock, and that was on August 5th. And the chief digital officer bought about $74,000 worth of stock on August 7th. So that's one last part of the picture here that I like for EHealth, is the idea that insiders were stepping in at a time of distress in the stock and basically saying, we are committed here, and they're putting their interests on the same side as all the other shareholders by committing their own funds to the stock. I like that sort of thing. Insider sales, to me, aren't quite so important because basically with a lot of executives, they are given options as part of their compensation packages, so I don't put as much credit on that. But when insiders step in after a stock has fallen quite a bit, as EHealth did last August and late July, to me that paints a picture of strength and confidence in the business model. And then when you look at the other aspect of it, which is what are Wall Street analysts thinking this company is going to earn for the coming year and for the year after that, and the year after that, if you can see a steady increase or expectations of steady increases in earnings, and the stock is still low priced, then to me that paints a picture of strong value. If you add strong value with the idea that perhaps short sellers might be more heavily into a stock than perhaps they should, given the strength of its business model, to me that points to the possibility of bigger gains ahead. So again, if you're looking at a stock like this, don't buy it expecting it to be another GameStop, but I am also at the same time saying that the fundamentals behind it may be something that short sellers are underestimating. In other words, EHealth, in my book, looks like it has strong value there. And we'll see whether that remains to be the case or not in coming days. I'm Jeff Yastine. If you like what I'm talking about, make sure to subscribe to my YouTube channel, follow me on Twitter and on Facebook.